All right. We're watching all that and more, and how the Indian markets will be reacting to that as they come online soon. GIFT Nifty futures indicating at this point in time a bit of a muted start. When that opening bell rings, it does look like it will be flat following a largely mixed Asian market sentiment given the not entirely clear US jobs data. And also remember, foreign outflows, they just continue with no major indication of a trade deal between India and the US coming through. The weakening rupee is really what's weighing on the sentiment. The rupee falling 3% in 3 weeks after falling to an all-time low of 91.01 earlier and continuing to be in that region of 91.02 really. Now Somnath Mukherjee is the CIO and Senior Managing Partner at Ask Private Wealth. He's joining us now. Ask Private Wealth is also the management arm of the Blackstone-backed ASK Asset and Wealth Management Group. Thanks so much for joining us, Somnath. Appreciate that. Thank you for your time. Let's just start with the rupee. Earlier this year, I believe you wrote a piece arguing that the fall in the rupee is a good thing. Can you outline your reasons for saying so?
Yeah. Good morning, Amituj. Thanks for having me. Yes, so essentially the fall in the rupee is a shock absorber. The way we see it is an adjustment in the value of the currency allows the policymakers enough freedom on the monetary and fiscal policy side to do what is really important, to focus on what is really important, which is growth and jobs, rather than be fixated on a specific level of the rupee. As is the case with anything else, rupee's value will be determined by demand and supply in the market. Currently, the demand-supply situation, as far as rupee and dollar is concerned, is indeed a little bit tight, and hence rupee is reflecting that value. From that perspective, it is great that the rupee is actually, being allowed to find a level that is market determined rather than the policymakers trying to defend a level of the rupee. Bear in mind the fact that India's inflation print, as you mentioned just a little while earlier, is coming in extremely low. And inflationary expectations are actually amongst the lowest that we've seen in many, many years. If there was a timing element to this is the best time that policymakers could use to let the rupee depreciate. Also bear in mind the fact that there is no hurry, it looks like, in terms of India settling the tariff situation with the US, which means that India remains right from the Straits of Bosphorus to the Straits of Malacca, the most tariffed country by the US in this entire region, which means that our trade-weighted tariff rate is about 2x that of rest of Asia. A rupee depreciation is the only meaningful, quick and relevant measure that India can take in the short term to protect a measure of its market share in the global export, especially in the US export market. So you put all of this together, and there seems to be no major downside to letting the rupee fall and find its own level given the demand-supply dynamics in the market.
Okay, do you think the fall in the rupee is now done though?
I would say that it will remain under pressure till the time we have a bit of a reversal from capital flows. The big reason why the rupee started being under a little bit of pressure over the last few weeks is not so much the trade account. The current account is coming in still at a very manageable 1.5%, around that level of GDP. What is really causing the tightness is a shortness or a net outflow in terms of capital flows, especially foreign portfolio investor flows. So it will remain under pressure till the portfolio investors, the FPI flows, don't do a bit of a reversal. But yeah, I mean, is it at a stage where we start getting worried? Not at all.
Okay, but if you believe that the rupee is going to continue to be under pressure, neither weaken nor strengthen, I'm not sure what you mean here. Please do go ahead and explain that if you can. What does that mean for how foreign investors are looking at Indian markets? Because you're implying out here that the situation for the rupee will only change once foreign investors and capital comes back. But we don't know, well, it could be the reverse, right? They won't come back if the rupee is weakening.
Contrary to what a lot of people, especially people who are commenting on these things, think, Investors have, when they underwrite investment decisions, they already have a dollar rupee depreciation view baked into their assumptions. And that over very long periods of time, 2 decades, 3 decades, has been in the 3.5% range. So whenever an investor is making an investment decision, and especially risk investment decisions, which is what we are talking about here, whether it is equities or something similar, they bake in a certain amount of depreciation. And even after the current movement, that trend has not been broken. The long-term depreciation rate of the rupee remains the same. It's about 3-ish% on an annualized basis. So it is actually a bit overrated to think that a lot of foreign investors are looking at their Bloomberg screens and starting to make decisions just because the rupee has depreciated by 3% in 3 weeks. But guess what? Over the last 5 years, that's the CAGR, and that's what has already been more or less discounted by most investors. And
Okay.
despite that, India has been one of the best performing markets for investors over long periods of time. So I don't think that is quite that big an issue for investors at all.
Are you suggesting also that domestic inflows, which has really been the engine room of India's growth for some time now, even they don't, factor in the rupees weakening as much as perhaps they used to in the past? It used to be headline making. It used to be a political issue in Parliament. Now, perhaps not so much. Are you suggesting that?
The primary reason for that is because of the low inflation print. The biggest domestic political economy impact of depreciating rupee is in terms of flow through on inflation. Given how low the inflation print is, and more importantly, perhaps given how sanguine oil prices are globally, the flow-through impact of a weaker rupee isn't really felt domestically all that quickly, barring a few hundred or a few thousand people who are probably directly impacted on various grounds. For the larger political economy, it's not that big an issue right now, which is why I said if they wanted to pick a moment where they could allow the rupee a certain amount of
Right.
accelerated depreciation, this is it.
Appreciate that. We're not letting you go anywhere just yet. Somnath Mukherjee is going to be back with us in just a bit to talk about the 2026 outlook, what he thinks of Nifty 50 in just a bit. Don't go anywhere. We're coming right back. Welcome back. This is Inside India. Japan's Mizuho Securities is set to acquire a majority stake in Indian investment bank Avendus from US firm KKR for up to $523 million. The deal, which would see Mizuho take 62% to 78% of Avendus's shares, marks a growing presence of Japanese financial firms in India, drawn by the country's fast-growing economy. Mizuho says the acquisition will strengthen cross-regional collaboration and position the bank to better serve clients seeking expansion in India. Mizuho is a part of the Mizuho Financial Group, and those shares are currently trading, well, at 5714, up 1.31%. Now back with Somnath Mukherjee. I want to start by what you've been saying regarding FIIs. You've actually said that FIIs are the joker in the pack. The foreign investor has been a net seller, but 2026, and that outlook, you suggest that the return of foreign strategic capital into India will come, and we just saw that with that report, particularly in the banking and real estate sectors, but you couldn't predict timing, and you said timing is a tough thing to do. So I'm going to push you on that. I'm going to ask you to guess a timing.
Extremely tough. And I wouldn't, and I keep saying that if I could time, then I wouldn't be doing this job. But while it's extremely tough to time, the fact is that circumstances or stars are aligning quite nicely for return of foreign capital to India. We've seen a bit of a drought over the last 12, 15 months, but I think most of the factors, most of the variables are showing a very clear indication that India is back to being one of the more attractive investment opportunities globally.
Okay, you did suggest that it's going to happen. In your answer earlier in your notes, you've talked about January or February, and you said it's hard. But I want to get a sense, are you indicating that it'll probably happen in the first half then?
It should. It should. One of the things that
Okay.
we noticed that in 2025, while foreign portfolio investors were relatively, muted and they were taking money off the table in India, the sector that is for India, what tech is for the US, which is financial services, saw an enormous flurry of deal flows from foreign strategic investors taking long-term bets in India. Typically, when strategic investors make such significant bets, and it was not just the quantum of dollars that was invested, but the sheer number of deals by different types of institutions and strategics that was remarkable. There were, quite frankly, there were probably more than half a dozen really substantial transactions that took place. If the strategics find the largest listed sector in India, which is financials, accounts for close to a third of the listed market, so attractive, then portfolio investors are bound to follow. Simply because it is, if strategics with a significantly higher return on investment criteria find the sector attractive, then portfolio investors are going to follow. So that
Okay.
should be the big trigger where India's largest sector attracts fresh capital on the back of the long-term attractiveness of the sector being discovered afresh by a bunch of strategics, along with the fact that policymakers are making it easier for those strategics to invest. Because traditionally India has been a little tight in terms of regulations around
Yeah.
strategic investment into key financial services sectors. But the portfolio investors should follow the strategics. That's the sort of core hypothesis there.
Okay, we got 3 minutes for 3 questions, and I want to follow up with this because you earlier indicated that the pivot to when foreign capital returns to India is going to be, according to you, a couple of things. But in your sense, based on high-frequency indicators, it's starting to look better. But could you just elaborate a little bit more on those high-frequency indicators and also tell us if those high-frequency indicators are big enough to make this claim?
Yes. First of all, the biggest signals that we see in terms of high frequency indicators are in terms of consumption indicators. Consumption is more than 60% of India's economy, and that is truly the bellwether to gauge whether India's macros are doing well or not. A range of consumption indicators are looking much better, from travel, tourism, automobiles, high-end real estate. So a range of such indicators are doing better. Now, if you aggregate all of it together with everything else, it still looks a little scattered, but the direction of the pivots are increasingly coalescing towards getting significantly better. We would see upgrades in earnings estimates very soon. Is our view that we should see a range of companies led by the consumption, by the consumer side of things, to get upgraded very soon, and that itself would start driving a lot of investor sentiment. Typically, a lot of the investors, especially passive investors, are driven by returns made in the immediate past, or the outlook that has just come in very recently. So there's a recency bias or some of the decision making, and we will see the key variables that drive some of the recency variables to come in much positive in the next few months and quarters to come.
We got 30 seconds, so I'm going to ask you one final question on India's AI story. You've earlier indicated that India can be a hedge to the US AI trade, China AI trade, because that's where the action is, and India has been lacking behind on that. But what if India catches up, because that's what the government is planning to do, and Amazon has put in a lot of money. India is hosting the India AI Summit. So just quickly on that, 20 seconds.
Oh, absolutely. There are a whole bunch of very exciting initiatives on the ground. All of them are in the unlisted side of the markets, though, and we see a massive amount of investor interest in the India AI space. India is the largest consumer of data in the world, and just to put a brief thing about it, India has one of the lowest per capita data center capacities amongst major economies. So the gap that we need to fulfill is very large.
Okay, we got to go. Thanks so much for that, Somnath.